Welcome to another segment of Market Overdrive. I am your host, residential real estate broker with Coldwell. My name is Karla, Mina, and it's a pleasure to hang out with you today, Nick. How are you?
Is it really a pleasure to hang out with me?
It's a total pleasure.
Look at you lying.
I'm so excited.
Starting the day off with a lie.
I love it. How'd you know?
Because I've never heard you say it's a pleasure.
A lot of
to hang
people
out
say
with.
that you're like lip shakes when you're lying. Mine doesn't. I can honestly look at you and say,
you're like this
it's a pleasure to be here with you today, Nick. How's it going? How's the market?
You're tweaking. It's not about me and you. The market is great. What it is about is our two guests today.
Is it?
Yes, let's get into our guests. Let's go quickly.
Are you going to do an amazing introduction,
I'm
though?
gonna let
Because
you do
these are
them.
some very VIP people in here.
I
High net worth.
I'm very
It's
aware
all
of that.
It's all I've heard.
We're going to be talking in the billions today, not
We're
the
talking
millions.
lots of money.
I'm officially a billionaire, by the way.
Yes.
Because nobody has as many bills as I do. So I like to call myself a billionaire.
I love it.
You know,
I think
just
that's
for
very
the record,
inspiring.
For the record, you guys aren't the only ones talking billions around here.
I love it.
I got plenty of bills myself.
Makes sense.
All right, but I am a hell of a thousandaire.
Yes, let's do that.
So let's
Own
introduce.
it.
Go ahead and introduce our guests.
Why do I even need to introduce Mr. Dan Wagner? How are you, Dan?
You are the best. I'm wonderful. It's
I
great
love
to be
it.
here. Thank
Do you know why I did that? Because Dan came in here and said, Karla, you're beautiful. Nick, you look so cool. Like, he's just full of compliments.
He
I
is.
love him.
He is.
Maybe
You
we
guys
should
are-
learn something.
You guys have been doing this for 3 years. Everybody knows you guys.
3 years?
Yeah.
I don't know. I feel like I just started.
Really?
2 years, 7 months.
Oh,
We're still
okay.
learning on the fly.
Oh, my God.
We're getting better though.
It's like a sentence, right? You're in jail and you go through this. And this is what it's like being
Right.
with, doing this show with Nick every
I'm up for
Wednesday.
parole soon.
Oh, yeah. All right.
Yes,
All right.
yes, thank
Doing
you,
a good
thank
job.
you.
Love it. And please introduce your guest today.
Well, we are to be here today. This is Keith Lampi. He's the CEO of the Inland Private Capital Company that works on the 1031 DST, Delaware Statutory Trust Program for the Inland Real Estate Group of Companies.
Love it. Welcome to the show.
Thrilled to be here, thanks. And I haven't gotten a compliment yet from Dan. So
You
hopefully
have not,
throughout the
Dan,
course of
come
this
on.
show,
He's
he'll
better
come
looking.
my way.
Share the love.
He's better looking than me, don't you think?
You both are.
No. This is I'm gonna call a draw.
You know what?
Draw.
Anytime somebody tells me they're going to teach me how to save money, you're beautiful. Like, you're handsome.
Yeah.
That does it
Yeah.
all right?
You
Save
are the
me money.
sexiest man alive. If you're
Very
gonna
good.
teach me how to
I'll take
save
it.
some
Hey,
money,
I'll
man.
take it.
Yes.
Let's get
Today's
into it.
topic is really intricate, but it's all about how to save money and how to reinvest your money, tax defer. And of course, there's a lot of people who are flipping properties and are thinking, oh my gosh, can I really take advantage of this? But you're going to hear some nuances to the process that may not allow you to qualify, but we do have lots of information. And the real reason is, let's just start with that. Just go ahead and tell me, why should we take advantage of a 1031 exchange?
Well, a 1031 exchange, I think
Well, better yet,
sure.
Yes.
what is it?
What is
What
it
is a
and how
1031
does it
exchange?
kinda
And then we can get into why.
And the interesting
Well, when you start
aspect-
seeing how much money you're saving, you're going to know why.
So 1031 is a really it's a terrific program that's been a part of our tax law for 100 years.
Wow.
The Inland Real Estate Group of Companies, where we come from, we're the experts in the commercial real estate world. We have 4 teachers that started our company, and they have purchased about $44 billion worth of commercial real estate in America. So they know this stuff inside and out. So the 1031 is it's probably one of the best producers of income for people around for commercial real estate. A good example is it's like the 401k of real estate.
Okay.
With the 401k, you put money in,
Yeah.
and then eventually you pay the tax when you retire. Same thing with this. You have income producing property, and when you go and you buy another income producing property, you can sell that and put all of the profits of that income producing property into a bigger property. It keeps growing and growing. The synergy of that transaction is incredible for our economy. And that's been a part of what we've been doing for a long time. In Washington, unfortunately, right now they are talking about possibly taking it away.
Yeah.
And it's the whole idea of tax reform. They're
Might as
looking
well take away the 401k too.
exactly. They want to do. They want to talk about taking away the 1031 exchange and also
No way.
mortgage interest deduction. So the National Association of Realtors is one of the best organizations around to be able to fight for private property rights. As you know, with the Illinois Realtors and Chicago Association of Realtors, we all work together to fight every day to protect all of these great pieces of legislation. And the 1031, like I said, is really the Energizer Bunny for our economy. And the 1031, Keith is his company for Inland is an expert in how it helps people deal day in and day out with the 1031. If you want to get into some of the details, Keith.
Keith, I
about
just
how it
want you to
works.
go ahead and give us an example, like more of a number scenario, because a lot of people are listening and they're like, wait, so it's like a 401k retirement account, but as I understand it, you don't have to wait until retirement. It's just a way to exchange products so that you're able to defer it, so you can reinvest it tax defer. Can you give me an example, like numbers wise?
Like an average person's example. Like
Yeah.
if you're just a novice, deal here and
Say
there.
I'm selling a $200,000
Right.
property.
Sure. So well, I usually use the $1 million example just to
okay,
kind of.
let's go back to that.
Okay, let's just
Okay.
jump right up to a million.
Forget my
We'll get
200.
to
I'll
billion.
take that.
We'll get
Give
to
it back.
billion later, but go ahead.
I mean, we can play on numbers a little bit.
This
here,
guy. I swear to God.
Oh my
Hey,
God.
it's
Billion. I'm going to call you Billionaire Keith.
Nice.
Billionaire Keith.
So, from an example perspective, right, Dan has kind of underscored how powerful this segment of the tax code is. So, property owner, let's say they buy a property 20 years ago and they pay $100,000 for it, and fast forward to today, that same property is worth $1 million. So you've got a very major gain to defer, and that's obviously a lot of wealth is created through real estate, and that drives tax or that drives retirement income along the way. So I'm that property owner I'm considering selling, but I look at the amount of taxes I'm going to have to pay if I do sell, right? I'm going to pay 15% federal gain. I'm going to pay state income tax, capital gain. I'm going to pay the 3.8% tax on Medicare, and then I'm also going to be hit with depreciation recapture. So in aggregate, sometimes 30, 35, 40% of my sales proceeds are going to be hit with a capital gains tax.
It's huge.
Huge.
So then I take that example and I say, you know what, I'm selling this property. I want to stay with real estate. I think it's a good income generator for me.
Your net worth is going up.
Your net worth's
However
going
you
up.
want to look at it, it's still net worth.
You need income, right? So I'm going to take that $1 million in sales proceeds. I'm going to roll it into another property. I might even pay a little more. I might buy a bigger property. And by doing that, by staying in real estate, I'm going to defer 100% of that capital gains tax. So I'm going to have that full $1 million working for me, generating income for me throughout that process. And that really speaks to why it's so powerful.
So non-taxable.
Love it.
If I sold the property for $1 million, made $800,000, I'm going to move all $800,000. No one can
Your
touch
net.
it.
Your
The net is $800,000.
Okay, yes, your net. Minus your real estate fees, marketing fees,
Right.
closing costs, your net number is what you're going to reinvest into the new product.
And you can keep doing that currently under the 1031 exchange rules with zero tax repercussion.
Right. It's a deferral. It's not a
Eventually, you're going to pay it, right? But right now,
Eventually-
you're reinvesting it, net numbers into the new acquisition, so you're able to use more of your money.
Right, and it's that power of tax deferral. So if I'm generating a rate of return on a larger asset, I've got taxes, or I've got dollars that would have otherwise been paid out in capital gains and various taxes that are now working for me to drive my retirement years.
Just like your 401k at work. I mean, it's that simple. The other aspect of this is Inland is an innovator in this space.
Okay.
Dan Goodwin, the chairman of the Inland Real Estate Group, created, working with our staff, the Delaware Statutory Trust. And Keith is really an expert in that. And this is something that realtors really should want to try to do and work with us on. And Keith, if you want to talk about what the Delaware Statutory Trust is with the ruling from Treasury, that's a big deal.
Well, it's an interesting play on 1031 that we've really kind of developed and modified and worked with the IRS on. So the Delaware Statutory Trust is essentially taking a larger piece of real estate and providing a structure that allows investors to come in and buy fractional interests in that property. So I'll use a local example. We were the first buyer of the first Mariano's that was developed in Arlington Heights.
What?
So yeah,
That means you get discounts at Mariano's?
I wish.
Can I get a
Can you
discount
hook
at
us up on those
Mariano's?
cupcakes? Those are really
I
good
love
cupcakes.
Mariano's.
But I will say the sales velocity that's been a great tenant, great performer for us. So the performance is definitely there. No discounts, unfortunately.
All
Wait,
right.
what?
But anyway, so that's a property. Let's call it a $20 million value. We're talking about an investor that may have $100,000, $200,000, or $1 million to reinvest. They're not going to be able to buy a Mariano's. Through our structure, by packaging it in a way that allows investors to buy fractional ownership units, essentially they can come in and own a piece of a property.
And when you say fractional units, what does that mean? What does that entail?
Well, it really
Do tell more.
So there's no minimum investment. So you're gonna have a wide variety of investor increments, right? Some people may put in $100,000. Some people may put in $1 million. The $1 million investor is going to own a larger percentage of the
Correct.
property. The $100,000 guy, obviously, smaller percentage, but they're going to have all the same ownership rights that they would have had they owned 100% of it.
That
So-
way, you do get a discount at Mariano's. No, at
So
100.
you
no?
could just be a money pool, essentially. You can, it's almost like crowdfunding.
Yeah.
But what's
It's
great
almost like
is
crowdfunding.
But it's
Let's
tax
say-
deferred.
let's say you're tired of taking care of that apartment complex you own, and you're tired of the trash and the toilets and overflow, all that kind of stuff. You make this into a passive investment by doing a 1031 exchange into this Delaware Statutory Trust, and you get a fractional share interest in that Mariano's or whatever it is. And it's an incredible.
How am
thing.
I seeing dividends?
The rent that Mariano's pays in that example is distributed to investors in the form of income. So
By
cash,
the by distribution portion. So if I had my 100,000 owned 2%, I would get 2% of the rent flow.
You would get 2% of the
of the
rent
net
flow,
operating.
net operating income. And obviously, some of these programs have a loan in place, so after you pay debt service and operating expenses, the rest is distributed to investors in the form of cash flow.
And I know someone's probably watching and they're very curious. What's the average return over the last couple of years?
It's ranged, and obviously it's risk reward adjusted, but I'd say anywhere between 5 and 6% cash on cash is kind of what we're seeing
pretty
in today's
cool, huh?
market.
Yeah,
So you
it's
put
pretty
in
good. I mean,
$100,000, you're getting $5,000 to $6,000 back every year.
Right.
Gentlemen, before we start
That
getting
doesn't
into the
suck.
type of vehicles
pretty
that we
good.
could go ahead and invest, and Nick is already taking out his wallet, wants to start writing you a check.
Nope.
Slow your roll.
Can write you a bill.
He's got a lot of those. Before we go into that, can we just go back a little bit to 1031 exchange and explain, like, Nick likes to do these 4 or 5. Let's go into, like, say 4. Like, what are the requirements in order for someone who's already doing this, like to start? How can I qualify for my 1031 exchange? How do I plan for it? What would be the rule number 1 for requirement to qualify?
So if you're a property owner, and it's a lot of property owners out there that own a primary residence consider themselves property owners, 1031 is specific to investment property.
Okay.
So if you own investment property, you own rental property or raw land for investment purposes, that's an asset you can sell and do a 1031 with,
Okay.
and it will qualify.
So
Not
let's
your
make that
home.
let's specify that, because a lot of people think that, oh, well, I just sold my $200,000 condo and I made $70,000. I'm going to roll that and use it as a 1031 exchange into now a 2 flat. That is incorrect. That is you can only do apples to apples. You can do single family or primary residence, right? It doesn't matter what type of property, it's just how you're using it. So if it's your primary residence, how about your, say, beach home or your second home, or you're in town? Can you use it and roll it up? And if you sell it, make proceeds and use it can you use it as a 1031 exchange?
So a second home, the only way a second home would ever qualify as an investment property is if you're renting it
Okay.
a substantial portion of the year.
Okay.
So a beach home that you just kind of use periodically and you don't have kind of a rental income stream attached to would not qualify either. So it does have to, it's very clear, it's investment property for investment property.
Awesome. I love it. So let's go back to my primary residence example. If I were to have used it and say I moved out and moved in with my boyfriend, and now I'm using it as a rental. It's an example for a client.
She tried to claim she has a boyfriend.
Oh, my God.
Oh my God, can you stop
is
that?
scary.
I'm
Can we
sorry,
go
I
back
was-
to
I
real
was
estate?
scary.
I was focused
Okay,
until
so
you said something
anyway,
ludicrous.
sorry, ridiculous. He's never gonna stop. Okay, so wait, I have this property. What if I rented it out? It's my primary residence, but I no longer use it because I moved in with someone else. Can I go ahead, in fact, use it? The money that I made on it, can I use it can I roll it into a 1031 exchange?
Yeah, that's a great question.
See?
That can actually work.
That's a good
So
question.
there is a period of time you have to rent it and for it to kind of convert in the IRS's eyes as going away from a primary
1 year
residence.
and
It's typically a year, 2 years. Every tax advisor will kind of give you different counsel
Okay.
on that, but that does work, and we have seen property owners kind of transact that way.
love it. So if you're flipping properties and you're listening to the show and you got that 90-day or 30-day transaction that you're changing, you cannot use a 1031 exchange product or tax defer, because you have to have held the asset for a year, and I believe a year and 2 days or something like that, in order for you to qualify. So that's again one of the requirements. It cannot be used as a primary residence, and you have to use it for an apples-to-apples investment, and you have to have held it for a certain amount of time. What is the other requirement?
So outside of that,
Mm-hmm.
like kind, it's got to be like kind property, investment property for investment property.
It's
but
more like a income property, like a
Income property.
investment or landlord type of product.
what's interesting about that is like kind. I think a lot of people think about that and go, okay, I've got a residential asset, I've got to buy another residential asset, or I have a commercial asset, I've got to buy another commercial asset, and that's actually not the case.
Correct.
Like kind's fairly broad spanning, so you can sell a raw piece of farmland and roll into a commercial asset. Conversely, you could sell an apartment complex and go into a industrial asset or a office asset. So as long as it's investment property for investment property, you're going to be okay
Or I could set it on my 10-unit building and go into investing with you guys, correct?
Exactly.
into the fractional ownership interest,
Right.
right?
Now there's some rules, because I remember doing one of these a while back where don't you have to, the sale of your property is, let's say, is around the corner. Isn't there like a timeline? You have to identify a new property. It's not like you could just sell it, hold the check at home for a year, and then, okay, now I found a new one, so let me do my 1031 exchange. Isn't there like timeline requirements between identifying a property and you have to close within a certain time frame? It's a lot
Yeah.
more. I mean, we're making it sound
easy. And you
easy,
can
but
just hold on to it.
there's some timing effects here.
Yeah.
that need to-
Tons of details.
Yeah, so,
So
can
what
we
is
can
that,
we get
Keith?
into that, because I think a lot of people really don't understand that. In
Yeah.
fact, I've been confused by it a couple different times. So,
So you mentioned, selling your property, taking a check, and kind of sitting on it. That's a very important no-no.
Yeah.
And I think that's the step that
Qualified-
a lot of people
Qualified
miss.
intermediary. you have to
Yeah,
have.
so
Yeah.
you need constructive receipt is what we're talking about here. You can't touch the proceeds. You've got to direct those to a qualified
To an
intermediary,
escrow account.
right? And so then those dollars sit in the intermediary's account while you navigate your way through the timeline that you described. So from the date you sell, you have 45 days to identify replacement
Now,
property.
who the heck is going to find something in 45 days in this market? You're killing me.
It's challenging, which, by the way, is interesting. That's where we come
Ding,
in.
ding, ding.
Right.
We have inventory at all times. We've
Oh, look at
at all
that.
times.
got a menu of
Yes.
options. So
yeah, you
investors,
guys are slick.
And by the
investors,
way, we
yeah,
have that.
That's how you became a different billionaire.
it's a value
We're figuring
proposition
things
that
out here.
solves
really
a
good
problem, right?
Wait, okay, so 45 days, but if I give you like 20 properties that I've identified, one of those may come to fruition. I qualify, right? Because I think there's a 6-month period or 100. How many days?
There is. So you've got to identify within 45.
Okay.
Now you can only identify up
Three.
to 3 properties.
What?
Only
So you
three.
are limited.
No way.
Yeah,
There's
you're-
no way.
Yep.
You're limited that way. But
Okay.
again, going back to our menu of options, you're going to have that. You're going to have that selection process.
We have a menu for you.
But you-
Mariano's is one of them.
Mariano's is one of them. But you don't have to invest in that 45 days. You've got the full 180 days or 6 months, as you described, to actually close on the purchase of your replacement.
How would they
property.
know if you identified 3 properties within 45 days?
One of
So
them's
doesn't
gotta
it just go
close.
from, well, you're identifying, you sell your property, you have 45 days to identify one of 3.
Yes.
So you write that contract up within the 45-day window. Is that what you're saying?
Yep.
No, so the qualified intermediary that I described, they've actually got forms and a process that creates a paper trail. So they're going to facilitate that identification process. So identifying 3 properties, they're going to have a document that kind of proves and it's timestamped that you've
They're
you
experts
followed
in
all
this
those
stuff.
rules.
Right.
So there's no way
Yeah.
around it because
There's
it's
no way
really
around it.
difficult. I know
There's
what
no
you
way
mean.
around it.
There's no way around it.
Yeah.
Nick. Do you have the oh my gosh, how do you say that word? Can you just intimidate?
I see that look in your eye, though. You're thinking
I'm
about
already
the-
thinking of ways around
ways to
it.
gain it.
Okay, for this person is going to help you say, okay, I'm going to buy, 400 East Sinclair or whatever, or the other one, and this is where I'm going to invest the money. One of those do not close because whatever, the property didn't qualify or whatever. I don't qualify for my 1031 exchange, so I cannot use that money tax defer. I now have to pay income on it, and I have to pay everything that goes against, taxation for it.
All these great questions. I love it. So
That's all right.
not entirely. So you've got three
a
properties.
way out.
There is a way out on that one.
See, Nick, pay attention.
So
I am
three
paying
Make it
attention.
your money.
3 properties, you don't have to close on all of them. And so a lot of investors maybe have one in mind that they really want, that they want to pursue.
Uh-huh.
And then there are two backups. So if the first one doesn't work out, they're going to move to option B or C.
Okay.
Some investors identify 3 properties or 3 assets, and they want to diversify across all 3. So it's not an all or nothing proposition. You do have some options within that 3 property rule.
Well, say somebody's just done, right? They're retired or whatnot. They've been landlords all their lives. They're just done with the whole, servicing tenants. Then they want to do something where they're more it's low key. You're just sending you money and you guys are investing it and you're giving me a 5 to 6% return on my investment. Why not?
Can I go through a hypothetical here?
Yeah, definitely.
Can't find any. I sell my property. I can't find anything I don't have 3 options. Can I use your fund as what was that? The Delaware
Statutory Trust.
the
Use
Delaware.
it.
Can I
with
use
your
that as a
insurance
safety
policy.
valve and just
Absolutely.
go straight over to Delaware? Now I have
Yes.
another question following that though. Now 6 months later, I have found some stuff I do want. Can I sell out of there? And then
That gets dicey, right? So,
Okay.
so you invest in. Delaware statutory trust interests are like most other real estate investments. It's illiquid, right? It's not something you could just, click the sell button like a stock or
Like a
or
stock, I
public
want my money back.
security, right? So it is challenging to just get in and out, and so we do kind of discourage parking type scenarios like this.
Mm-hmm.
But that first scenario you described is huge, right? You maybe want to buy something that you're going to own entirely, but you need these backup options, and if that doesn't work out, the Delaware statutory trust at least puts you in a position to defer.
okay, we
that
open up
tax.
another question then. So if I'm buying into the Delaware State statutory
Trust.
is there a timeline that you require me to stay in? I can't just sell when I want to sell out of there.
Yeah, typically we estimate or we pin the response to that on a 5 to 7 year time horizon. So the hold period on any property is ultimately going to be dictated by market conditions. We're going to drive value through property and asset management. So we're going to kind of think about when it's the right time to sell on behalf of our investors. And we have completed, we've sold over $1 billion in real estate over the past 10 years. We have about $5 billion in assets still under management. So we're very active, not only buyers and product creators, but we are also completing programs and completing the process.
As an investor in that trust, am I getting a return on the equity?
You are.
Not just the cash flow of the rent.
Right. So all of the benefits of real estate ownership pass through to you. So if to the extent that property appreciates in value, that's something you're going to also enjoy as an investor.
Right, because initially you said there's some investors who go in with minimum investment and there's other investors who go in with larger, but everybody gets part of the equity, correct?
Right.
And then a percentage of the investment for
Right.
whatever profits
and
they're making.
You might hit on the net worth too.
So these are designed for high net worth investors. It's
Dan
considered.
just told us you
Nope,
may
Karla,
just tell
you're
everybody
out.
you can't qualify.
Karla's out.
I'm out.
There you go. You ruined that party.
Thanks
No
a lot,
way.
Dan.
You're a net worth. You're a high net worth. Give me a break.
Yeah, she's high when she's thinking about her net worth. Well, here I have another question though. So, basically the trust or anything like this trust is a safe way to still take advantage of the tax repercussions if you sell the property, because I've seen people, I don't want to say horror stories, but where they're rushing to make something happen, and now the focus of what they're buying has gone delusional. They're so concerned about the tax break versus is this even a good investment property
Great
to
point.
purchase?
Right.
And they're in a rush or in a frenzy. I got to do this because if I don't do this by now, then I'm going to be stuck with the tax implications. But then you bought a lemon, if you will, and it doesn't make sense to, at least if you have the safety valve, if you will. And we're not here to.
You realize, like a guy like so one of our founders, Joe Cosenza, he does all our acquisitions. He's from Chicago. He has bought the $44 billion in America. So he knows all the people around the country with Target or Lowe's or wherever we're gonna buy. He knows all these people, and we get incredible deals on apartments, on everything. We own 40,000 apartments at one time in Chicago. So we have experts who've been doing this for 40-some years, totally understand the market, and they're going to be the experts to be able to identify this is the best investment. So you don't have a mom and pop person trying to figure out where's a good place to get my return. This is why inland is such a terrific place to put your money.
And so along those lines, we're programmatic buyers. We're constantly in the market. We kind of take that leave no rock unturned mindset. So we're always looking for opportunity across various sectors. And going back to that menu, we're buying the menu before investors need it. Mm-hmm. So we go through that exhaustive process of deal review, due diligence, analysis. We can be very thoughtful because we're buying with it ultimately being a replacement property in mind. So by the time investors get to the point where they're considering those options, we've already thoroughly vetted them. We've done our exhaustive
And it's around the
homework,
country, right?
and
Keith?
it's nationwide.
I mean, that's what's a big deal.
So I just want to encourage people to understand that this is something that you can plan on long term, right? You're talking about people who get frustrated because they can't identify that property. In 45 days in this marketplace is very difficult just because there is a lack of inventory and everything out there is seeing multiple offers, right? And again, let me go back and say, depending on location, there's some locations that are still kind of stagnant. There's not a lot of movement. But if you're looking in those like neighborhoods where you're buying multi-units and there's no inventory, this could be a better option for you. Of course, you need to grow into that role and understand that, some people are worried about cap rates, right, for a smaller unit. But this is something where you are actually acquiring commercial property that has a lot of research backed. I mean, you're looking at location, the best location for Mariano's, and I know that has to do with a lot of traffic, and you're looking at a lot of details, stuff that's not available to us on a smaller budget, right? So if somebody were to grow into this, you're saying like to start, you'd have to at least minimum it's like $100,000 investment, or?
That's right.
Hooey!
Let's do it.
Well, I do have a question though. If we have an emergency situation, let's say you have someone do it very well, business is great for them, they throw you $500,000 because it was very affordable for them to invest that way, and then something happens, business tanks, business is in for bankruptcy, life has gotten tough for them. They went into it with the premonition they're going to probably be waiting 5 to 7 years before they can get their money back out, but there's emergencies. How do we handle a situation like that? Like, if my cash is locked up at Inland, how can I get to it if it's an absolute dire emergency?
No, it's a good question. It's a
'Cause it happens.
real life example for sure.
I gave you my example before the show started.
You did. You did.
Right?
You
You know,
did.
I would have been calling you, being like, "Give me my money now, man."
Are you going to share your example on air?
No.
I mean, we do get those calls. They're fairly infrequent. I mean, I can count on one hand the number of times we get that call, because I think our
High net worth, Nick.
well, you've got that, and I think that's
Still happens.
That's incredibly a big part of the narrative that we describe when explaining these products to investors. You should expect to have your money tied up for an extended period of time.
Mhm.
It's illiquid. Know that going in, but things happen, right?
Right.
So in instances like that, what we'll typically do with the investor's consent is we'll provide their contact information to the rest of the investors in that particular program.
So they could buy more shares of the project if they wanted to.
Bingo, right? So a lot of investors will then call the investor that wants to get out, and if they're sitting on extra cash, or they like the performance of the asset and they're interested in owning more, they can kind of negotiate that amongst
So
themselves.
the four of us bought a project for $1 million. We each have $250,000 in there. Karla decided to spend all her money
I
on
would
something
not be the
ludicrous,
first.
unicorns and rainbows, because that's what she talks about all day long.
I love unicorns
So then
and
the three of
rainbows.
us would get a notification that Karla's out of money and she absolutely needs her money back so she can purchase more unicorns and rainbows. And we would have that option. Now, it could be where we would, what if all three of us went after? Well, that's a good problem for her because she gets her money faster. But
And she's probably going to drive the price up on us, right? She's probably going to create a bidding war.
oh,
if that
really?
were the
Does
case.
that happen?
I mean, you can, right? It's
So
subjective.
if we
You're-
all want it, because this is a great return on investment, we're each making 7% or 6% a year or
So I
whatever
just
it is.
made money on my unicorns and
Now her
rainbows.
250 can come back out, and we can say we'll give 3 or we'll give 4 or whatever the case is, because we.
depending on how bad we want it, right? And if,
Oh, wow.
if that's an above market
You're
return
gonna
that
want
it's
it.
generating, we're gonna
Trying to find
maybe-
another loophole in this whole situation.
Yeah, I see it.
I'm
I
going to
see
get
it
in the
again.
park. I'm going to buy 500 grand. Oh, I'm broke. I need my money out.
Right.
600. Can I get a 700? Can I get a 750? Can I get an 800?
with our product, what typically do you have experienced with investors when you actually sell something, how they reinvest with us?
Well, so I mean, I mentioned 5 to 7 years, and you earlier mentioned cap rates, right? I mean, cap rates are low, so I kind of take a cautious approach in terms of like planning that extended hold period.
Right, and when you say low, I mean, in some cases, cap rates are really high and they're healthy. I mean, we're looking in some areas in the south side of Chicago, higher risk. And you're going to have to diversify your tenants, right? You're going to have market tenants, and then you have Section 8 tenants to kind of get most of your money from a rental perspective. You have areas with 12% cap rates, and you're looking at some more, conservative neighborhoods like Gold Coast and Lincoln Park with a 6%. You're lucky if you get 6%, right? It's mostly 4% cap rates.
Right.
So, it's the higher the risk, right? The better the investment. But you're telling me that you have a sound investment that's not very risky, or is it?
Well, I think the point I'd make along those lines is cap rates across the spectrum have dropped compared to where they were 3-4 years ago. We're at a point in the market cycle where we recognize we're buying at values that are higher than they were several years back. And so when I look at our investment thesis, whether it's for the apartments we purchase, the self-storage assets we purchase, the healthcare-related assets we purchase, I like those assets long term, but I don't look at them as being a short-term kind of quick flip, 3-4 year hold, and then we're going to make money kind of proposition because of where we're buying in the market cycle. So back to the question.
So it does affect you as well. So you're saying because there is no inventory and there's bidding wars, the acquisition is going to be higher. So you're looking at low cap rates. But you guys but you're buying in bulk. So are you getting deals?
Yeah, I think.
I would hate to think they're getting bad deals when you're investing.
Well,
in it.
he's talking about the market.
Are
and
you
it's still
getting deals?
affecting
No,
him,
we
the
just buy
market.
whatever, whenever.
He just said it's market affects.
Market pricing is always. I think there's a lot of talking heads
He's
that will
saying that-
sometimes say, "Hey, I'm going to create value because of who I am, and I'm going to get this
Well,
off-market
that's why I want to
deal."
roll with you because you got the inside scoop. Like,
So,
give it to me.
And I think obviously having the scale and presence we do nationally, you're going to get an opportunity to see things that others may not. And so
Okay.
I do believe we buy well, we buy better than the average run-of-the-mill investor. Having said that, assets we were buying 2-3 years ago, we've actually taken full cycle. We've sold those on behalf of investors. Been tremendous profit-taking opportunities.
course.
I just wouldn't set those expectations today. I look at it
Well,
as a
the
long-
market
that's
was
something
the
that
market
Nick
was a
kept
lot
saying.
cheaper from in
Yeah.
2000. I bought a lot of stuff in 2011 and 12, and yeah, it's
And
a
you're
whole
always
different
saying,
price today.
now's the
you
time
know?
to sell,
Right.
get
I'm,
rid of
I'm,
it.
I'm selling all of it as we speak. So
This DST
I got some 1031 exchange coming.
and because you're a high net worth person, this thing is kind of like a centerboard for your portfolio.
Okay.
I mean, it's one of those things that you have, and it's really mailbox money. You get a check every month, and people absolutely love it. And when people reinvest after we sell,
Did he say mailbox money? So
He
you're
did.
getting
He
bills.
said it. He said
He's
it.
getting
This
mailbox
guy's coming.
money.
Dan's coming in with all sorts of
Mailbox
terms that I've never.
I
The
love
401k
it.
real
See?
estate,
Telling you.
mailbox money.
Wow, we're
like
gonna
it,
have
huh?
to hashtag all that mailbox money.
He's like, marriage is great. Everything that I've never heard in my life before until right now.
He's
marriage
amazing.
is the best.
He's the
Kids.
best, and he was on vacation just recently.
Oh my gosh!
Shout out to your
yes.
family.
Thank
Love
you.
them.
John, Michael, and Danny. I know you're listening. Love you
Oh,
guys.
love it.
Love my wife, Lisa. There you go.
I
had
love
to
you,
do it.
Lisa.
Triplets. He has triplets.
Triplets
That's
plus
a fun
one.
factor. Plus one. Triplets
Yeah.
plus one.
The
They're
triplets
incredible.
and Lisa love the
Oh
mailbox
my
money.
gosh, they do. They do. 100%.
That sounds like a sitcom waiting to happen. Triplets plus one.
It seems like it sometimes. Yeah,
So-
you're right.
Let's get something very clear, though. You have the 1031 exchange is a way to avoid paying taxes on your earnings from
Not
property you just sold.
avoid. Not avoid. Just defer.
Defer.
them
Defer.
for
Some people-
later.
It's a big deal.
Some
to know
people,
that.
it,
Nick
it
is gonna
feels.
find a loophole after
feels-
loophole.
Well, I'm going to keep deferring
gonna
until
get
I can
audited.
avoid
This
one
show's gonna
day
be
down the road
IRS
when I'm 80
audited.
and about to die. But
Your lifestyle at 50. You should
but let's not misconstrue the situation. If you're putting your money into a 1041 exchange,
1031.
1031 exchange, and you're deferring on your taxes, and now you're getting rental income every year. That for those that are watching, that doesn't mean that the rental income is tax free. That's income
That is.
because a lot of people are like, oh wait, I shouldn't have to pay tax on this.
Well, that's a whole different formula, right? Because we're talking about getting the proceeds from your recent sale, the net proceeds. Whatever it costs you to sell the property, marketing fees and closing costs, your net number, you're going to reinvest it into a like vehicle, another 2 flat, or maybe you're going to a 10 flat now. That's going to be easier to manage. You're growing up in the world, right? But if you use less of that money, then you're going to have tax implications with the money. You have to be able to reinvest all of it. And you could do multiple sales. But then after you're carrying that vehicle, like your 10-unit building, the rental income that you're getting, that's a whole other transaction, right? That's a whole other IRS formula. This is just transferring, exchanging one property for the other, or reinvesting your net proceeds, right, in exchange for another product.
And the other important thing with this, for realtors, working with their clients, because obviously the realtors are the professionals that know how to do all this
Say
stuff.
that again?
The
realtors,
realtors
not
are
the lenders?
The
Okay, good.
realtors are, sorry about that, Nick. But hey, I got to take care of Karla,
I love
Oh,
you.
And by the way, it
man.
is Fran Brody's birthday today. So
Happy birthday, friend.
I love that woman. She's
Coldwell
great.
Banker family.
Yes,
See, he's full of
absolutely.
love
I
for everybody.
Love her. But it's important for realtors to know when you identify 3 properties and they're working with their clients, if they put this DST as one of the backups, this is the insurance policy. Because I've known so many realtors that work with folks that the deal blows up and they're so embarrassed because then they have to pay all the capital gains.
Yeah.
So we are the insurance policy for the realtor, and people are really loving it. So about 30 to 40% of folks are trying to put this down as their third choice. And it works out great, right, Keith?
No, it's
I love it.
great
So
option.
it is one of your third options.
That's what people
It's a
do.
great idea.
They put that down as a third option, and it's just make sure to take care of it. Now, it's a security, so a realtor does not get a commission. It's not something they can do, but it's wonderful to take care of your client, and realtors want to take care of their clients.
For sure,
That's the
right?
most
Yeah, you
important
can't
thing.
win them all on every.
Yeah.
Right.
I hear good realtors always backing out of deals, which no realtor wants to back out of any deal they wrote up. But then they find something out and they pull it out and they fight for the client. I mean,
Yeah, you got to
not
make
every
sure that
deal's
it's a
gonna
secure
happen.
asset. It's going to
Right.
generate income.
Client for
right?
life or client for one time.
Right.
Right.
Because there are horror stories out there. You guys have known people that have gone through
Oh
this.
yeah.
I mean,
It's
and
a
even
big
if
deal.
somebody says, "Oh, I don't want to lose the client," you're going to lose the client because the other deals fell through. But then this is a way of saving your clients so much money because they're
Right.
not going to get the tax implications of the income they just made on that property.
And a whole other aspect of this, you have farmers. This is the lifeblood of farming because farmers are usually cash poor and dirt rich, right? And when you have a farmer who has
Pun intended. Dirt rich.
dirt rich,
I like that.
yeah, but
Cool.
another one, there you go.
See, you're on a roll, man.
401k, mailbox.
I'm gonna
money.
contact you every
You
morning
come
for
up
some
with
new quick.
WGN. We
Telling
really
you,
need
man,
Nick to
this
come
is
up
good.
with these, and if you come up with this, he can
That's because
go.
I buy Karla. She
Dan the Quip Wagner.
Karla is causing me to do all these great ways of thinking. That's why you're so good, right?
I'm
Nick? 'Cause-
inspiring him. Oh,
She does. She
I love
inspires
it.
me.
See, Lisa, how can you not love this man? Jesus.
But the deal is that you have farmers that are able to sell their property, and they work with conservation, a lot of conservation people. So tons of the conservation stuff out west that's been set aside for for the federal government for conservation easements to make sure to have clean water and everything. That money's coming from conservation groups paying to farmers, and farmers are able to do 1031s so that they can use that money to 1031 back into their income producing program. They can buy more land to be able to grow on. So if they have farmland or something they own right next to the Mississippi River, well, a conservation group might say, let's buy this 100 acres, and then we'll be able to make sure to have a good clean runoff into the stream, to the river. But you can use that money as a 1031 exchange and put it into buying more land to be able to, or you can do it. The farmers love our DST program because that's how they get their passive investment. So they cash out, they go to one of our DSTs, and it works out great.
Right. Farmers are a huge
you have
component of our
you
business.
have a great example. And the Realtors Land Institute, they're over at the NAR building. They're phenomenal. They represent all the realtors that are into farming, and it's huge.
And you're saying that the legislature is changing and that they want to get rid of these
Oh, my gosh, Karla. Thank God for the National Association of Realtors. We're working with the Federal Exchange Accommodators, which are the qualified intermediaries. We're working with the Real Estate Roundtable, International Council of Shopping Centers. All these different groups are fighting, but none more important than the National Association of Realtors. I tell you what, when they talk about getting rid of the mortgage interest deduction and the 1031, if you ever seen Lord of the Rings, it's like the Ents going to war. We're going to go to war over that. I mean, the realtors are going to go, because the realtors are boots on the ground and they understand what's happening in communities, and they know how important and synergistic these 1031 programs
are.
are.
We're always saying that we're advocating renting versus buying. Why not buy when it's going to be more affordable? I just read an article saying that the amount of people renting is so high right now, and you wonder what are the pluses?
It's cheaper to own it right now.
It's
For the
definitely
most
cheaper
part.
to own, but we have incentives like these,
Right.
and they're getting taken away. Like,
Right.
how do you?
And it's the bedrock. It's the bedrock of America. Home ownership, right?
Yes.
It's the bedrock of America, and it's a huge deal that we make sure to wake up our legislators, because what their concept is, they want to bring the corporate tax rate down to 15%. And we're saying, but don't do it on the backs of real estate. Doing tax reform, when you hear people say bring the tax rate real low, they're going to try to use the mortgage interest deduction and the 1031 to do that. And we as realtors have to stand up and get buckets of cold water and throw it on people and wake them up, because every time they've done tax reform in America for over the last 100 years, they look at these things and say, oh, let's get rid of these things. And every time they finally wake up and say, that will really kill the golden goose that's been feeding us. That's another one, Nick. Golden goose. But that's true.
We're loaded with stuff today. My question is then, well, I mean, and I really hate talking politics because I just hate politics in general. I don't care what side you want to talk about. I just hate politics. But you would think that, the current administration coming from the real estate industry would actually help keep this in line. You would think.
Well, you would think that, and we're trying to.
I mean, he made his fortune off of real estate.
But this has been in place for a long time, right? The talks about changing this has been in the works for a long time. It's not just with the new administration,
right?
Correct.
This has been. They've been
right,
talking
but
about.
That's the people that are in charge right now, and so
enforcing it. I mean, every bill has to go its lifeline, right?
When the Democrats were in charge, they also looked at one of their solutions to tax reform is to look at real estate too. So it's really a bipartisan effort.
Right.
We want to wake people up to say, look, and once we start educating people in Congress, I've met with a variety of congressional staff members, and a lot of them are about 23, 24. They don't really know. It's like drinking from a fire hose, because you deal with foreign affairs, all this other stuff. And so this is a part of the tax code. And you say, 1031. I was in a meeting where a staff person looked at their watch and said, no, it's 11 o'clock. And it's like, hey, it's 1031.
Yeah.
You got to explain this stuff to them. And once people start recognizing the synergy, because when you do a 1031, like he said, you're able to open up that property that was really stalled because nobody wanted to pay that capital gains. So when you do a property, the realtor makes money, the lawyer makes money, all the different ideas of renovating the space. You know what it's like when you renovate something, or when Inland buys a property through a 1031, we're putting on a new roof, we're putting on new HVAC. What other stuff, Keith?
Well, along those lines, I mean, we kind of see things from an investor perspective, and we kind of hear the sound bites in the market. I can't tell you how many investors I've talked to where they've looked at the tax consequence associated with selling, and had there not been an opportunity to defer that capital gains tax, they just wouldn't sell.
Right.
They'd sit on their assets. So that's a big fear factor here, is that this could create a general freeze in liquidity throughout the real estate markets, and then to the tax revenue associated with all the different constituents that get paid, and all of that income is taxed throughout the transaction.
And you get transfer taxes too at the local level, and it's just deferred. You are going to pay. It will happen someday, but
eventually, right?
It is the absolute spark plug of the economy, and this is what it's been for years, and people want to mess with that. Our economy's finally turned around. Why are you want to mess with real estate and how we do things? They're talking about 100% expensing instead of doing the 1031. 100% expensing. If you're Keith looked into this, you might talk about what we found at Inland when we looked at doing.
What is it?
Well, so when you own a piece of real estate, you could depreciate it on over a schedule. So 100% expensing is essentially accelerating the depreciation. And taking
which is definitely not going to be you're not going to get the tax savings that you would if you got the 1031 exchange, which you're getting the discounts from the taxation that you would get if you had to use it now, right?
Right, and I think it would help the large institutional buyers, but it really hurts the little
mom and pop.
little guy,
yeah,
the mom
the
and pop
2 flat,
investor.
the 3 flat, or the 10 flat buyer, commercial property.
That was
buyer.
kind of the challenge that with respect to that, and there've been a myriad of proposals that we've looked at and evaluated, and I mean Dan does a phenomenal job. I think just staying in front of all of this for
Gentlemen,
I
I
love
want to
Keith.
thank you so much for coming on the show, just because it is such great information. You're listening to Market Overdrive. We're here every Wednesday at 10 a.m., and we're definitely here to elevate your real estate IQ. We're providing you information that no one's giving you. A lot of agents don't even have this information accessible to them, so they don't understand the intricacies of all these different programs. And part of being a realtor, you have to be able to facilitate this kind of information. How can we save money? Now, moving on, gentlemen, a lot of people are talking about this said correction in the market, right? Okay, so the bubble, it's great. Is it a bubble? Is it a mirage? There's not a lot of job growth, so why are people overpaying for these properties? Looking at it into this perspective, like where some people are saying 3-year correction or 4-year correction or 5-year correction, they really can't tap into it. I'm thinking that, kind of invest now, make a lot of cash, and then save it, and then go invest in vehicles such as what you're proposing today. What is your take on that?
I think as a general rule of thumb, real estate's always been a longer-term minded value proposition. Don't get me wrong, we focus very much on market cycles and where we are in that market cycle. And real estate isn't a one-size-fits-all proposition. So it's also important to isolate your analysis and buy the right properties in the right markets.
For the right reasons.
For the right reasons, right sectors. Generally, I think when you look at the stock market, the bond market, that's a segment that's obviously seen a tremendous run. And I think what we've seen is additional growing demand for real estate, for hard assets. People are looking for a safe haven to kind of put their money into, because if we are at this point in the market cycle where it's getting a little long in the tooth, I want to be flight to safety, flight to quality in a hard asset that I can kind of touch and feel and understand the tangibility of. And I think that carries us through a market downturn. So back to my original point, even if we see ourselves ride through a cycle here, if we see some cyclical pressures on cap rates, if you as a real estate operator can continue to drive rents upward, you're going to come out the other side in a healthy fashion.
And globally, look, everybody wants to invest in America. I mean,
Right, yes.
And it's wonderful. You love when people invest.
And Chicago, it's one of the top 10.
It's incredible. Yes. I mean, that's where people want to invest. And again, real estate is like the center board of your portfolio, because you can't all of a sudden say, oh, things are going bad, I'm going to sell real quick. I mean, it slows you down so you don't blow yourself up.
Right.
Look, there was a lot of people that made a lot of money in 2010 and 2011 in real estate.
Yeah.
So you got to know how to navigate the system as well. There's
Right.
There's people that are taking advantage of the situation when everyone else is going in the same direction, and just jump on the train and you're going to follow and make some money that way. And there's people that just decide to watch a train go by and eventually wait for it to stop and figure out a way to loot the train, if you will.
It's the people who always say,
there's
is it the right
some
time to
really
buy?
rich people
Yeah.
that did a lot of buying when everyone else was losing homes.
Right.
So you just got to,
Well, that's kind of what I'm asking now, Nick. Are we there where a lot of people are asking, is it the right time to buy? Is it the right time to sell? Like, where are we in the market where
there's always
do
a
we
right time to buy.
stash it or we keep it? What do you recommend? What are your thoughts on that?
What we've been fairly dynamic in the way we evaluate real estate opportunities. So back in the 2010 era, we were buying a lot of triple net leases. That's when we bought Mariano's. Long-term lease, get behind credit. The rental income stream is relatively fixed, but we were buying at great cap rates, and that was the right time to buy those. Today, when I look at where we are in the market cycle, and a lot of economists will use the innings, right? Where are we at? Maybe we're in the 7th inning, maybe we're in the 8th inning.
Okay,
You
now
just
I'm
lost
out
her.
of-
You
yeah,
just
last inning.
completely lost Karla. I got you, man. Are we in the bottom or the top of the 8th?
Wait, I kind of
who's
know
it
that now in
bad?
baseball.
Is this the Yankees playing?
The Cubs just won the World
I
Series.
text them all the time. My kid plays baseball, and I'm like, okay, so we're at the top of the 7th. What does that mean? How much more time do we have this? Because I got to go. I got a showing.
Right.
Here
So,
we go. Let's
Touchdown,
go.
baby, touchdown. Okay, Karla.
And I'll layer one more thing on there. Then you hear some economists say, "Well, we may be in the 8th inning, but this series, this cycle may go into extra innings."
Extra
right?
innings.
So
It's like,
I
oh,
know
okay,
that.
great.
I know that.
you hear all this stuff, and,
Right.
and I would say generally where we've shifted focus, because we are at the maybe the second half of the ball game, is we're looking at operating assets. We're looking at buying properties that we feel like we can create value as a property manager. We could drive rents, we can keep occupancy healthy, we can manage our expenses, and that's really the fundamental, roll up your sleeves way to make money in real estate. It's not gaming market cycles. It's not trying to time the market. It's buy with a strategy, hold through a market cycle, and if you've got an asset manager that knows how to create value that way, it's a good time to buy.
And
Right.
being national. I mean, Keith, where's a great state right now to go buy?
And we've been very active in Denver on the residential side. Obviously, population growth.
Wonder
income.
why.
Right. That's one
Legal
example.
weed. Legal weed.
Who's that? Everybody's moving there.
We're really high on Denver right now.
We love
Really? Are we really high on Denver right now?
Oh, you
But
think
see-
that's the trend? Huh?
Oh,
Yeah.
that's
Oh,
Yeah.
Keith is so cute.
Yeah,
I
that's
love
the trend.
you.
Notice where the league gets legalized, values go up. Everything else goes up too.
You're talking about farmland. I'm like,
Farmland.
Oh,
we have
yeah,
farmland
there
in
you go.
Chicago,
Plenty of-
dispensaries
plenty
in
of dirt over
Chicago.
there.
Yeah.
But see, that's a good question. That's great dialogue because you have people who are listening or watching the show now on Facebook Live or have you, but they're thinking, okay, I'm going to get a higher rate of return. We're talking about 5 to 6%. We talked about the higher the risk, the higher the return. So a lot of people are going to be like, forget that. I'm going to stay within my vehicles where I'm flipping properties per se. And I know you can't do a 1031 exchange and a flip, but what I'm saying is like you're making money, say 31 or 41% return on investment for some flips that I'm seeing out there for the people who are able to buy low, right? So these people are stashing their cash. They're saying, why am I going to go into a vehicle that's going to be, I don't have control of it. Everything's picked for me. All the work is done for me. So I don't get my hands dirty. I mean, we had Flip Chick in the show just some time back, and she's advocating, start flipping women, empowering women to flip. So what would you say to someone like that?
I think it's just a different risk profile, I mean, every investor has to kind of evaluate that and figure out what risk tolerance they have. I mean, the one comment I'd make if you're thinking along those lines and maybe sidelining cash, and by the way, there's a lot of cash still on the sidelines in
It's crazy.
in America. I mean, it is. It's incredible. But if you wait too long, you miss.
I got like $4 over there on the side.
Can I borrow the $4?
Nope.
$2.
take if you're sitting in cash for 3 years and you're missing out on 5-6% returns, there's 15-20% return on your investment that you're not receiving by sitting in the sidelines. So 1031 dynamics I think shape the decision to go in and the timing associated with going into a particular real estate holding. So it's a little bit less of what we're thinking about day to day. But back to my original comment, I think it's always a good time to buy the right asset in the right cycle for the right reason.
Whoo-wee.
What?
It's coming to an end.
We're coming. Great information.
I just realized what WGN stands for today. You're listening to WGN News. It stands for Wagner's Got News.
Oh, I like
Wagner's
that.
got
Oh
news
my
today.
gosh! Can I tell my mom
Wagner's
you
got
said
news.
that?
We've officially
We're
changed
going to
the
officially
corporate.
send you the
That's
clip.
awesome.
Just go, Mom, if you don't believe me, watch this. And you can show her the playback. Wagner's Got News.
Wagner
know-
got news.
You're officially hugged right now, Nick. Just so you know.
Air hug.
Air hug. There we go.
Air hug,
Air
man.
hug.
Oh my God. I don't think he's ever experienced this much love. I think like there's like smoke coming out of his.
What you talking
He's a
about? The
good
minute I leave
guy.
here, I got plenty of love.
That's got to be the
Oh.
first air hug on the show, though, right?
First
Yeah,
air-
there's
first air hug,
towards
that's good.
Nick.
My first air hug was with
Definitely.
a man. Whatever
Says
works,
a lot.
man. Whatever
I don't
works.
know. I think Graco would say differently, but okay.
Okay.
You look like a metrosexual to me, Nick.
Thank you.
Absolutely.
I think. Wait.
Totally
do we-
makes
when-
sense.
Thank you, I think. Cool.
Oh my God. 1031 exchange to Nick.
Oh, WGN. Wagner's Got Nick.
I'm telling you. Wagner's got
We got-
it.
we gotta
That's an
wrap-
interesting one.
We got to wrap this bad boy up. We're on the 53-minute mark. This is like a record-long show. You got something to add
You're
at the
an
end.
officially metrosexual. I love it.
Metro.
I don't even have to pick on him today. You did it for
That's
me.
good.
I
I
love
don't think he was
it.
picking on me. You just didn't
I was-
understand the terminology.
I didn't.
Okay.
Because I just officially just
Okay.
said something about it. Okay. Keith, thank you so much for coming to
Thanks for having
help
me.
us understand the intricacies of a 1031 exchange. If somebody had questions and wanted to get a hold of you, where can we find you?
We call our general number 630-218-8000 and ask for Inland Private Capital Corporation, and you'd be directed to any one of our associates that'd be happy to answer questions and take it further.
Nick, you need to start burning your billions.
I'm going to get out of here and go deal with my bills in a little bit. But with that all being said, the fun is unfortunately coming to an end. You will be able to watch this show on 1031 Exchange via Market Overdrive on YouTube, or you can, of course, catch it on our WGN podcast. It will also still be stored here on our Facebook account. The website will have it up as well. I want to thank Dan Wagner and Keith Lampi from Inland for coming in and giving us all this information and a lot of cool new sayings that I'm going to run with.
Mailbox money.
Keep watching the show. You're going to see
mailbox money.
Dan Wagner's going to live on for a while because I'm going to be reusing his sayings for quite some time.
We need to hashtags on all our shows.
You're getting a real hug when this is over with.
There you go, man.
So
we went from air hug to real hug.
It's happening. It's
Metrosexual.
It's happening.
I want to thank you guys from Inland for coming in and educating us on all things related to 1031 Exchange. Obviously, this show is brought to you today by Inland as well as Karla, Mina, Coldwell Banker, and myself, Nick Memeti from iLoan Home Mortgage. You can see us here next week at the Facebook at Market Overdrive live, 10 a.m. next Wednesday. Thanks again. See you next week, guys.
Terrific.
Thank you.
Thanks.